There we go. Are we live? Okay, I think we're live. We are live here. All right, what is up, everybody? It's Brian Humphrey here with Humphrey Bookkeeping LLC. Welcome to episode number 2 of Bookkeeping with Brian. Today we are going, let's see, what do we got going on here? I'm sorry, I was a little bit confused by my new software, but I think I got it now. All right, Humphrey Bookkeeping. I'm one of the partners here at Humphrey Bookkeeping alongside our fearless leader and enrolled agent, my mother, Jackie Humphrey. We are a family-owned bookkeeping firm. We offer bookkeeping services, tax planning, prep and filing services, advisory services, and much, much more. We do work with all different types of clients, but we specialize in working with owners of plumbing businesses to make sure that you as an owner have not just a clear picture of your finances, but that you also have clear understanding and clear control. So just real quick here, obligatory legal business one more time. The information provided in this video is for educational purposes only and should not be considered as professional accounting, tax, or financial advice. Consult with a qualified professional regarding your specific situation before making any financial decisions. Humphrey Bookkeeping LLC, its partners and employees are not responsible for any actions taken based on this information. So first thing here, happy Pi Day to everyone. March 14th, 3.14, happy Pi Day. I actually know off the top of my head the first, I think, 12 digits of pi, 3.14159265359. That is thanks to an old roommate that I had. We spent one night of him just having me practice that. That was a lot of fun. So happy Pi Day to everyone. Okay, so last week we talked about some basic financial terms and also the importance of quality bookkeeping for your business. So today what we're doing is we're gonna dive into something here that might sound a bit technical and it might sound a bit boring. But it's actually super practical for your business, and it's also super necessary for your business. No matter what, no matter where you're at in your business, kind of what size or what your goals are or what have you. This is something that's really important for everybody's business, in my humble opinion. And that's your chart of accounts, okay? Chart of accounts. Now, don't worry if that term sounds unfamiliar. By the end of this session today, you'll understand what it is, and you'll also hopefully be able to see how it can make running your plumbing business a whole lot easier. So before we get started here and kind of dive into the chart of accounts itself, just a quick little history lesson. So accounting and bookkeeping have been around for a long, long time, okay? The general ledger concept, which is still used today, and is basically just the complete record of all of your business's financial transactions, that dates back to somewhere between like the year 1200 and the year 1300, from all accounts. And that was when Italian merchants actually developed something called double entry bookkeeping, which is still the standard for bookkeeping work today. Okay, so there was a Franciscan friar and mathematician named Luca, I think you pronounce this Pacioli, Luca Pacioli, and he wrote a book that actually kind of broke down the double entry bookkeeping system in 1494. So that is the first record of someone teaching people this system. But it was, like I said, by all accounts, it was likely being used as early as the 13th and 14th centuries. So I think that's pretty cool myself. Hopefully other people do too. So at the chart of accounts, that's just the organized index or filing system, if you will, for that general ledger. Okay. So if you think about it, back in the day, accountants had to use actual physical books, right? They had large books with pages that were dedicated to different types of transactions. So they needed, when you're entering a transaction, you needed a way to know which page to go to so you can put it into the right account. And now today, our accounting software handles all that for us digitally, but the concept is literally exactly the same as it was back in the 1200s and 1300s. It's the organizational system, tells your bookkeeping software where to record every single penny that moves in and out of your plumbing business. And getting the structure right from the beginning will save you a ton of headaches down the road, okay? So that's why I call this the blueprint for your business, because that's how we think about it here at Humphrey Bookkeeping. So just like when you're like installing a plumbing system, you need to know where every pipe goes, how the connections, what connections to use, how everything fits together. Your chart of accounts is that blueprint to show how money flows through your business. Now, if you remember those terms we talked about last week, we talked about assets, liabilities, revenue, expenses, and equity, right? So your chart of accounts organizes all of these into specific categories that make sense for your business. So before we dive into specifics here, I've got kind of a sample template set up here. We're going to talk a little bit about how the structure works. Now you'll notice here on this template that I have that these templates, I use a numbering system. Okay, so it's not just random. There is a method to the madness here. Okay, so we use these numbers. Like 1,000s are assets, 2,000s are liabilities, equity we're in the 3,000s, revenue we're in the 4,000s, cost of goods sold 5,000s, and so on. All the way to 7,000, I think, is how far we go on here. Now, this numbering system is not only designed to make your accountant happy, okay, although it does do that too. It actually helps organize everything in your accounting software so that your financial reports, when you generate and print off these reports, or if you do them digitally, whatever, it makes sure that the reports come out in the correct order, so you can more easily get the clear picture that the report is supposed to show you. Okay, and then you'll see within each section, you kind of group kind of similar accounts together. So like your cash and bank accounts, these are assets. So then we've got subcategories here. There's your business checking account, there's your savings account, there's your petty cash. Same thing down in like revenue. Okay, so we've got revenue, so all of your revenue is going to go in the 4,000s, but then you're going to split it up a little more. Service calls in 40/10, installations in 40/20, and maintenance contracts in 40/30. So what this does is it makes it way easier to find things, and helps you quickly get a handle on where your money is either coming from or where it's going, depending on what you're looking at. The beauty of these types of numbering systems is that it works whether you are a 1-truck operation or a 50-truck operation. All you really do as you get bigger is you just add more detail as you grow. So let's jump in here. We're going to start looking at this. This is the small plumbing business chart of accounts template that I kind of use internally when I'm setting up a new client in software like QuickBooks Online or whatever it is that they use. So now if you're a smaller operation, maybe it's just you and a helper or two, maybe it's you by yourself, maybe it's a family business, maybe you do the plumbing work and your wife does the paperwork. Your chart of accounts should be pretty straightforward, like shown here for a small plumbing business, okay? One mistake that we see in small businesses a lot of times is trying to create too many accounts and separate things out more than it needs to be. Like, you go down to, what do we got? I mean, you don't really need like 15 different accounts for like your tools right here. You don't need, well, these are my power tools and these are my heavy tools and these are my tools in my toolbox. You don't need all that. You just got tools and supplies. It goes into there. Same thing for revenue. Revenue, you separate by service calls, new installs and maintenance contracts. That's probably going to be enough for a small business that's just a few people and doing less than $2 million a year in revenue. That's probably all you need. like I said, keep it simple. You don't want to overcomplicate things because then you kind of end up spending more time doing your book work than you're actually spending, doing plumbing work and actually generating revenue for the business. Quick example here for you. We have a client that we currently work with. I'm going to call him Bob. His name is not Bob, but that's what I'm going to call him. But Bob works alone, okay? He used to have a few employees, but now he's just working by himself. He does mostly like service calls and small repair jobs and stuff like that. He drives his personal truck. He doesn't have a specific company vehicle. And then he's actually planning to retire and shut down the business later on this year, okay? Now, keep that in mind for later. He's shutting down the business. He's not selling it, okay? So since he's not selling his business, he's not selling most of his tools, he's not selling most of his equipment, he doesn't have any vehicles to sell, he doesn't really need to spend as much time or receive as much detail from tracking every little thing as maybe a different business would, maybe a larger business or a business that plans to grow later on in the future, right? All he really needs, this template right here is plenty for him, because all he really needs is tax compliance, record keeping compliance, and his bottom line, okay? That's plenty for Bob. He's got plenty with just what we have right here, okay? Remember, you can always add more detail later as your business grows, but if you start out with a system that's too complicated, like I said, you end up spending more time on the bookkeeping and accounting work than you spend actually building and growing your business and taking care of your business. Now, as your plumbing business grows, so industry standard for plumbing businesses, strictly plumbing businesses that don't also do HVAC, anything over $2 million a year in revenue, $2 million to $10 million a year in revenue is now considered a medium-sized plumbing business, okay? That's when you might want to start tracking revenue by service type, maybe a little bit more carefully. Let me see here if I can just... Wait, I went too far. So we're going to compare these two here as far as revenue. Okay, so if you look at the revenue section of the small business template, we've got service calls, installations, and maintenance contracts. When you get a little bit bigger, you might want to separate that a little bit more. Separate residential from commercial service. If you have a different price point for emergency, like after hours or weekend services, you're going to want to separate that out. Another one for maintenance contracts, installation revenue. And then we also have sections down here for other revenue. That'll be your service fee income, even parts of materials revenue. Okay, so if you notice here, we still have the same main accounts. Okay, we've still got the revenue accounts, the cost of goods sold, the operating expenses, the assets. All we're doing here is we've kind of just started separating our transactions with a little more detail. Another good example would be under, let's see, marketing. So that'll be an operating. So marketing is going to be an expense account, okay? Now, if you're a small business, you're just fine if you just dump everything that you pay for marketing and advertising into one category. You know, if you pay for ads on Facebook and you buy some decals or some magnets to put on the side of your work truck, that's all going to go in the same spot. Now, the larger your business is, and the more kind of moving parts that you have, the more detail you're going to want in there. So this is the medium-sized template that we kind of start out with. You'll notice that on the marketing expenses, we've separated advertising from website and digital marketing, and we've also separated out print marketing, and we've also separated out lead generation. Okay, if you use any kind of like firm or company that helps with that, you can purchase leads, however you do it. So basically what we're doing here is, like if you have a stack of receipts for marketing, all we're doing with this medium-sized business template is we're kind of dividing those up by type a little bit more. Okay, so what this is going to do is this is going to help us track how much business we're bringing in from which marketing type. Okay, so that way we know if we should maybe spend a little bit less on print marketing and maybe spend a little bit more on website and digital marketing. It can show you maybe you have a higher success rate with your digital marketing, or maybe your website marketing brings in more of the job types that show a higher gross profit margin. Okay, so this is more detail basically gives you more information so you can make data-driven, informed decisions about where you're making the most money, where you're spending the most money. Make sense? I hope so, because that's all I got on that, okay? So medium-sized approach as opposed to the small business size approach, it's the same principles, the same foundation with a little more detail. Now, for those of you running larger operations or with multiple locations, or if you're thinking about expanding and growing in that direction over the next few years, your chart of accounts becomes even more strategic, okay? Now, keep in mind, this doesn't necessarily mean making it more complicated. It means making it more useful, okay? Because you're still tracking all of the same things. See here? Assets. Look, just like before. You've got your assets, you've just got more categories. You've got your liabilities, you've just got more categories. Your equity accounts, you've just got more categories. It's all the same stuff, just in greater detail. Like I said, the more moving parts you have, the more detail you need. If you have multiple locations, you might want to, here's one for a multi-location. Now this one looks a little bit scary, and it is. But keep in mind, if you look here, you can kind of see, this would be for a very, very large business that has 5 locations, okay? Because you've got your headquarters, and then you've got, we'll just call them, for the sake of argument, outer locations. You wouldn't necessarily name them north, south, east, and west. You know, if they're in the same city, you would probably name them something like the street name that they're on. Or if you're in, if they're in different townships or kind of subdivisions or neighborhoods, you might, like if you're in the Houston area, you might call this one, let's see, you have a southwest location, that would be Sugarland. If you got a north location, you're like Spring Branch area. You can name it however you want, as long as there's some way to signify to like IRS which revenue is coming from which location. Now, the key here, especially when it comes to either your large, I forgot to put large on here, whether it comes from your large template or your multi-location template, the key here is consistency across the organization, okay? Like, for example, if one location categorizes emergency calls as one thing, maybe emergency call, and then another location calls it emergency service, then you're never going to be able to run accurate reports and compare from location to location. Kind of in the same vein there, if you're a large operation and you have multiple people entering your transactions, consistency is important there too. If you have one bookkeeper that's your employee that calls a service call, and then another one calls it, if you go a service call for a water heater repair, and they call it water heater repair, or they call it repair instead of service, then you're not going to get everything into the same categories the way it should be. So consistency is key here, especially the bigger you get, the more crews you have going out every day, the more jobs you're doing, and the more locations you have. Consistency is key. Again, it's all the same stuff, but you've got more detail going in, because the more moving parts, the more important it is. All right, so next up, future-proofing your chart of accounts. And when I say future-proofing, What I mean is making sure you don't handcuff yourself in regard to growth. Okay. Um, so the way that these numbers are set up, we try to make sure that there's plenty of room here to add things in, maybe additional things that you're going to need later on down the road. You don't know what they are right now. I don't know what they are right now. But that's why we leave gaps in these numbering systems here. So that way, if you start adding a new service, maybe you used to be just plumbing, but now you do plumbing and HVAC. So you're going to go up to your revenue here. Come on, mouse, start working. Your revenue accounts. There we go. And you're going to add in, okay, so, hey, we need another one here. We're going to call 4080 HVAC install. We'll call 4090 HVAC service. And so there you go. Now you've just added two things to your chart of accounts that will track. So now you've got your plumbing revenue coming in up here. And you're also able to separate out your HVAC revenue since you just recently added HVAC to your business. You just want to make sure you got room to grow. So even if you're small now, if you think about where you want to be in the next 3 to 5 years, just leave room. Just leave open numbers. All of our templates here go to the 7,000 range. But if you add something that doesn't fit into one of these other accounts, you can just add 8,000. Just start using the 8,000 numbers. Just make sure you always leave room in case you add service lines or locations. And remember, your chart of accounts, it's not just about tax time, okay? It should give you useful information for making data-driven business decisions every single day. If it's not helping you understand your business better, it is not doing its job. Okay, not to the fullest extent that it could be. Okay, so before we wrap up, that's kind of the chart of account basics. A couple of things before we wrap up here. I've got a few common mistakes to avoid. These are the most common mistakes that we see in the plumbing business owners trying to take care of their own chart of accounts. First one, like I said earlier, creating too many accounts. Keep it simple. Like I said, you don't need 10 or 15 different accounts for just your tools or service revenue. You don't offer 15 different types of services. Keep it simple. What's the sales acronym? Keep it simple, stupid. Not calling anyone stupid. How about keep it simple, fella, even though that doesn't spell a word. Second thing is not aligning your chart of accounts with what you need to know about your business, okay? You might look at this template over here and say, well, I'm a small business, so this is all I need. And it might be all you need. But if your specific business needs an account added or an account taken away, do that. Set it up in a way that makes sense for you. Set it up with, set your accounts up with account names that make sense, and not just for you, but also for your tax forms. Just set it up the way that you need it. There's no one size fits all for something like this. And if you try to use what somebody else used, you'll find 9 times out of 10, you're either missing something or you have too many somethings. Third is going to be the inconsistent use of accounts. If you're, say for example, like I said earlier, if you're categorizing water heater repair as service one month and install the next month, your reports won't be accurate. Be consistent. Make sure that you and your employees and your accountants and your bookkeepers are all on the same page. And just, keep it that way. Also, not reviewing. This is another mistake. Not reviewing and updating your chart of accounts as your business changes. Some people like to, we're creatures of habit. We're humans. If you always do what you've always done, you'll always get what you've always gotten. Okay? So just a review every so often to make sure that you don't need to add or take away anything. Kind of something to go along with that. This is a big one. This is probably the number one, is modifying your existing chart of accounts. Now, if you are not extremely familiar with all of the different accounting and bookkeeping software that is used, not just by you, but also by your accountant, and how these things work together. Please, please, please do not ever just jump into your software and start making changes to your chart of accounts willy-nilly, okay? The problems that you can cause, I mean, when you change just the name of an account, let's say if I change this payroll taxes payable, if I change the name of this to payroll taxes owed, then it still means the same thing. But is this going to change all of the new entries I make into this account, or is it going to change every entry I've ever made into this account? Different software works in different ways, and you really need to have a firm grasp on what a small change like that will make to not just your current data or your future data, but also your historical data that has already been handled by your accountant. So if you let's say you take a look after this video and you say, my chart of accounts, we put it together as a small business, but we've grown some, I want to add some detail. If you don't really know what you're doing, do not do it on your own. Talk to your bookkeeper, talk to your accountant. If you've been doing your books on your own, send us an email, send us a message, give us a call. We can help you with things like that and make sure that the data that's already in there stays in there the right way, because trust me, there have been mistakes made before, and I learned a lot from the other people's mistakes, even about how to do these things the right way, and that just the man hours that you'll have to pay your accountant to fix everything. If you screw it up, it's going to be a large bill that you do not want to pay. Just trust me, okay? All right, so that's basically everything I got today for the chart of accounts. Sorry, the video ran a little bit longer than I expected. I do hope that this helps kind of demystify a little bit what seemed like what could be confusing or kind of boring. Yeah, it might be a boring topic, but it's such a powerful tool. Once you've got this thing in there correctly, it is so powerful, and that's what we're actually going to look at next week. Like I said, if anybody has questions or comments, feel free to comment on the video, send us a message on social media, or you can also go to our website at humphreybookkeeping.com to schedule a phone call or a Zoom meeting with us. I have links in the description here, I believe, to visit our website. As far as what's on tap, next week we're going to take this a step further and we're going to talk about the financial reports that come from your chart of accounts. Now this next week, this is the exciting stuff, at least for me anyway. We're going to take a look at what I call the big three reports. So that's going to be your profit and loss statement, your balance sheet. Profit and loss statement is sometimes referred to as your income statement. So we're going to look at that. We're going to look at your balance sheet, and we're going to look at your statement of cash flows. Okay. So what we'll do is I'll show you how to actually read these reports and understand how they're structured and what they mean. We're also going to, I think, tentative plan, we're going to do a little bit of detective work next week. So right now I'm putting together some fake financial reports for a fictional company, and we're going to see if we can go through these things together and identify some possible issues by reading these reports, and we're going to look at what to do about them, and see how much information we can glean about our business and the current financial state from using these big three reports. This is the fun stuff for me, so I'm already really excited for next week. I know it's kind of lame. I'm just some old accountant guy that gets excited about reading reports, but by the time we're done, who knows? Maybe you'll be just excited as I am. Okay, so again, closing business. If you haven't already, make sure you like the video, share it if you like. Make sure you follow or subscribe to our page, whatever platform you're watching on. I'll have this on YouTube here shortly, so that way you get notices about our future sessions. We are going to be back on track next week now that I have my shiny new camera and software. So we will be back to Thursday at 10 a.m. Central Time for next week's video. So that'll be 11 a.m. Eastern, 9 a.m. Mountain, and of course 8 a.m. for our friends in the Pacific region. That's all I got for today. Thanks for hanging out with me again. Have a great rest of your day. Enjoy Pi Day. Have a great weekend, and I will see everybody back here next week. Bye-bye.